Hi guys, this is Mr. Forex, and today we are going to take a look at the previous opportunities that I was highlighting the past week, and we are also going to cover some new pairs for the next week. So if you're interested, please stay here. We'll see after the intro.
Can I be your superhero?
So right now I'm going to play a record of the last week's video where I was explaining the reasons why I was looking at this chart with my bias to the buy side. Very strong break, and we can wait therefore for a retracement on this level to see some kind of maybe a double bottom and a continuation of the uptrend. So like I was predicting, I was expecting price to go even further down in order to give me a more comfortable situation to exploit the market. And therefore, when I saw price coming back to this area where you can see there was a pin bar that was signifying buying pressure, and that pin bar was followed by an engulfing candle that was saying that buyers arrived. So as soon as I saw this candlestick pattern, I placed my order right down at the blue line, like I told on my idea. I updated my idea and I said that my orders was set. So I waited for price to go even further down to retrace back as it did, and then I entered the trade with stops right down here, and first target here and second target here. Now the first target was it in a matter of 1 day, something like this. And right now price is consolidating at this high here, and I am considering to exit my position if price still can't break this high the next week. So here's the situation. We are going to take a look now at euro dollar, where we have a downward bias, a short bias. That's because we saw price breaking this low from north to south. So we see this movement right here, these strong bearish 3 candles are signifying that the trend could have been changed right here. If you see this movement, it broke the long trend line that was pushing price higher during this moment. So we see a decrease in the speed of the trend, and we also see, like we've never seen before, a break of the previous support. So you saw price go up and up without even breaking new lows, and that is a sign of an uptrend. So when you see the first time you see price breaking new lows, you can expect trend to change. You can say that there is an early sign that price wants to go lower. So you can do one of two things. You can place a sell stop order right down the support, right below the support, and you can wait for price to touch it and you sell with maybe stops above this engulfing, this candle very bearish, and it breaks new lows. You can set stops right up here and targets at the next structure level, or you can wait for price to make a clear sign and you can then wait for a retracement. And you can either use simple patterns like ascending triangles, or you can wait for price to touch this previous box here. So the major point I will be looking at is this 1.1850 level, because I know there was previous support that now can become resistance and can push price lower. So if I see something like a double top or a pin bar followed by an engulfing. These are all signs of reversal. You need to choose some of them, and you then have to backtest those entries so that you have confidence in your trading system. So you choose a set of rules where you can actually take positions in the market and you stick to the plan. You backtest those strategies and you use only those strategies to enter the trade. This is a way that can improve your trading. So you can either choose simple patterns or double tops and something like candlestick or something like that. Next pair we are going to look at is Aussie Dollar, and this was an analysis that I published on my TradingView because price is right at the low here, daily support that could push price higher. We always see a major trend here. We see higher highs and higher lows. One here, one here, one here, one here, and you see also higher highs. So this is a sign of an uptrend, and you can expect price to continue in its trend until it breaks structure to the opposite direction. Right now we are testing previous structure, but we didn't manage to break down at the first test. In fact, you see a nice looking pin bar right here that is telling us that maybe buyers are coming in. So I went down on the 4-hour time frame. I saw another pattern like a pin bar followed by an engulfing, and then I placed my trade at a retracement down here, and I'm in the trade right now. I entered on this candle right here, and now I'm waiting to see if price will hit targets or stops. Stops, of course, would go like 1 ATR. I usually use ATR to place stops. So if I see a pattern like this, I open my ATR, I look at the ATR at the signal right here, so 28 pips. I take the low here, that is 0.7799. So like, let's say 78 minus 28 is 77.72. So right here I move target at roughly a 1-to-1 risk to reward, and that's it for the first position. Then the second position, I can use structure like this previous structure that was tested multiple times. One here, then here. 3 tests are telling me that this structure is very strong, so I can use this level to take my second position off, or I can hope in the continuation of the trend and place my second target at the top of the move. In this case you would have a much better risk to reward ratio if you manage to hit that, but it's a probability game, so you want to choose the right level that is an intermediate one, but that you can achieve more times on the long run. So if I manage to hit this, let's say like 50% of the times I hit the first target, and that's better than a 20% happier. So it's all a matter of probabilities. The last pair we are going to see is New Zealand yen, and that's because I am taking a look. I use my daily time frame to highlight a very nice structure, and you can see price hit multiple times this structure here, and finally the past week we hit again this price level, and we bounce back immediately from that. So I'm expecting some kind of reaction right down here, and I can use in this case advanced pattern formation like a bat pattern. So a bat is formed by first a 50%, at least 50%, but can touch the 61.8 retracement, so in this zone here. Okay, then I expect at least a 38.2 that was hit right here, and now I'm going to place order have this 88.6% of X to A. So order right here, stops below X, like we can say we are on the hourly time frame, so we can say like 20 pips, or we can use again ATR. So like this, we have something like 14 pips, so it would be a little higher than that. The important thing is that you put your stop below the X point. Then you throw a Fibonacci retracement and you use the 38.2 for the first target and the 61.8 for the second target. So you have a positive risk to reward. You can see it is more than a 1-to-1 risk to reward, and that's important. And also you have the second position that you can need, and it can be something like 2 times the risk. It is a good structure, it is a good way to enter trade, and I'm going to take part of that. So that's all for today. 3 pairs as usual, and you can like the video if you liked it. You can follow me on TradingView. I will leave the link on the description box, and you can comment if you want to say something. Otherwise, subscribe to this channel, and I hope to see you next week. I wish you a great trading week.